future. We're talking real money.
Let me ask you a question. What is better for your future? Watching sports or learning how money works? And if you said watching sports, you have a lot of work to do in your life. A lot. You have some serious issues you need to deal with, my friend. Because money, it's the stuff. Money's the driver of existence. It's this. You can't. I'm sorry, but if you don't have money, you can't watch sports. You can't. If you can't afford those cable subscription, you need to know how money works. You need to work with it, and you need to make more of it. Sorry.
Yes, sir.
Sorry. Still recovering from the injury. You need to know how it works.
You look good, though.
Thank you. Well, I'd rather sound good than look good, but appreciate that. So we're here. We gather here every Saturday. I'm Don McDonald. Tom Cock is over there in the Model Military Aircraft Museum, and we just hang around trying to make your life a little bit better financially so your future can be, you see, a little now can become a lot down the road. And we're also here to kind of keep you on track. Our number is 855-935-TALK, 855-935-8255. Now, I want to show of hands, even if you're driving, because most of you have cars that can do a little hands-free for a second. How many of you have been a little freaked out by the last quarter in the financial markets? Oh, I see several hands up out there through my magic
guy just
8
about
ball
hit my
or whatever.
Tree right there.
Slow down. He has one of those older cars. I, on the other hand, have not looked at my account for the entire quarter. Now, that's not necessarily by design. That's sort of because it's been a crappy quarter for me, and I haven't had time for that. So what I'm going to do right now, on the air, live, on the radio or on tape, on a podcast, I am now going to look at my Schwab account and see, you get to experience my live reaction here on the air.
Wow.
You ready?
Wow.
Here we go.
This is big.
I got to click the button. I'm clicking the login. I'm clicking it.
What do you got?
It's spinning. It's coming up. Oh, that was anticlimactic.
Is there anything still there?
Yeah, it says text me, and it has to text me a security code. That was totally anticlimactic.
Welcome to the real world.
Okay, let's see. Don't give this code to anybody, so I can't tell you.
Oh, that's too bad. I was looking forward to having everyone share your account balance.
This device. I just typed in the code. This stuff.
This is live radio, right?
I know.
And you haven't even given the phone number.
I gave the phone number.
Okay.
855. I did too, folks. Did I give the phone number? 855-935-8255. I gave the number. Okay. I got the little spinning ball thing.
I'm not bailing you out on this one. Is it bad?
Oh, it's bad.
Is it bad? It's bad.
Oh.
Are you going to go on? Are you going to be able to continue doing the program today, or is that we have to take a pill and call it a day? Nap, maybe?
Is that 100? Oh, my gosh. That's real money I've lost. That's real money. And a lot of people have, too. So what do we do about this, Tommy boy?
Well, it is real money. I laughed a few minutes ago when you said you start with a little, end up with a lot. You can start with a lot and end up with a little. It's difference. Because, the third quarter just ended. Yeah. Like a week ago.
How bad was it? I see how bad it was.
It was bad. I mean, the S&P 500 lost just about 5%. Global portfolio lost about 7.5%. But here's the part that's even more painful. Because I know you got some of these, and I got some, too. These crazy little thing called bonds.
Yeah, I'm looking down at those, and I'm seeing all red. Everything is red.
The intermediate-term bond mutual fund that we have used for many, many years now, year-to-date, is down 14.1%. It lost 4.75% in the third quarter. 1 quarter.
Okay.
Wow. So what do you do?
Yeah, what do you do?
Well, I'll tell you, first of all, the things you don't do. You don't get emotional. You don't change your asset allocation by selling stuff. You don't want to sell when the market's gone down. Here's another one you don't do. You don't pay attention to the pundits who say, this is really bad and here's what's coming next. Because they don't know any more about what's coming next than you do.
So you should kind of do what I did, not pay any attention. I would have been better off if I kept
It's going to be
paying
a
no
bad day
attention.
for you now the rest of the day.
And
Here are the things to do. Yeah?
Yeah.
Real quick.
Okay.
You got to have a plan for the long term. You got to be diversified. You got to know your risk tolerance. And then if you're still nervous and upset and all that, you got to get help from a 100% fiduciary advisor.
And call us at 855-935-8255.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Here is that easy peasy phone number for you to call us and talk with us about money. That's 855-935-TALK. See, it has talk in it, which means it must be for a talk show. And it is. This one, 855-935-8255. And I got to tell you, not looking at my Schwab account, I was totally fine. Totally fine. But there was a visceral, deep-rooted kind of lizard-brained emotion that hit me when I saw how far I've fallen over the past year. And although I know, I mean, this is the issue. Intellectually, I know there's nothing I should be doing right now.
It does raise an interesting point because, as you know, I talked to a family member of yours this week.
You did. You talked to one of my cousins, yes.
Yeah, and who had looked at her portfolio, which had also gone down. And her response was, they must be doing something wrong because there's less money in there today than there was 6 months ago. Now, this situation does open, it is a good opportunity to look at how you're invested. Because you got to be diversified. It's a good opportunity to see how much risk you're taking.
But let's talk about the diversification because a lot of people think
I can give you the numbers.
Okay, why do you want to be diversified when everything is down?
Because not everything is down the same amount. For example, small company value stocks, they're only down 11% for the year, whereas the S&P 500 is down almost 23% for the year.
Oh,
so there's a difference there. So owning different, what we call asset classes, I know it's a lingo, different types of stocks, if you will.
And let's talk a little about the types. Yeah. The types we're talking about. There's a growth and a value. Growth is companies with rapidly rising earnings. Value is companies that are not making great money currently, but
we could just say it, can't we? They suck.
Well, they're having problems. They have issues.
Yeah, okay.
That's value. Okay. Then you have small and large. You can throw mid in the middle of those if you want, but really that's smaller companies and larger companies. Then you know the larger ones because you shop there, you hear about them, et cetera. The small ones, you don't know. They're the apples. Yeah, the small ones you don't know. They're the up-and-comers.
Sorry. Yep.
They're the apples from, years ago when they were in a garage and you didn't know who Steve Jobs was.
Exactly.
They are, and then we add to that emerging markets, and international.
Brazil, India, China.
Then the big internationals that make up a sizable portion of the global economy.
Yeah.
And then real estate.
Remember when England was important, all that sort of
thing? Yeah,
thing.
remember when England was actually a world power?
Yeah, and they didn't make horrible decisions about taxes, et cetera.
Or being a part of the European Union, that kind of stuff?
Yeah. Mm-hmm. You were mentioning then also, what was the other? Real estate.
Real estate.
Yeah, but now we're not talking about residential real estate here. We're talking about like commercial real estate and apartment buildings and stuff like that. That are REITs, real estate investment trusts, not individual properties, not residential.
And then finally we have bonds. Finally we have fixed income. Yeah. There are some other asset classes that could be added. People tend that some want to add commodities or gold. We think that makes no sense because we don't think the numbers work. We don't think the numbers work. Some have numbers that they claim to, and that's the difference. You got lies, damn lies, and statistics.
It's true, Disraeli. Yeah, back to because I think that the stock part, I think we can all pretty much agree there just are times when stocks stink. It's 1 out of about 4 years that stocks in general do not make money. They are losers. So that's expected. On the other side of the coin are bonds. Now, it's unusual for bonds to have a year like this. This is pretty catastrophic when it comes to fixed income because remember, fixed income is just that. It is an IOU. It's a piece of paper that says, I'll pay you back. Here's your interest and here's your principal. So to see those go down as much as they have can be fairly disconcerting. Now, in this period of really pretty rapidly rising interest rates, the numbers do make sense. But again, when you sort of step back and say, wait, bonds are supposed to be the solid part, that can be disturbing to people, no question. I still think in the longer term, this is great news for savers because you're going to start earning 4 and 5% from that safe fixed income before too long. And it's going to get back to a more normal situation.
And for those of you who are longer term investors, you have to understand that the numbers long term are on your side. They're just not on your side right now. I love a chart. There's a chart we use in a lot of our classes that shows the performance of various things since 1926, which is really the only period for which we have decent data.
Yeah, where you can really say you got
Prior
it.
to that, nobody kept track. Because bear in mind, they didn't have massive rooms of people
Wait, there was
doing
no
accounting.
Robin Hood then?
There was no Robin Hood.
Come on.
If back in 1926 you had just $1 and you held that dollar till today, excuse me, you'd have less than $1. Inflation would have killed you.
Yeah.
Excuse me, I don't mean to be coughing. T-bills over 1-year T-bills over that period from 1926 to now.
How much?
You would have made $21 on $1.
So in almost 100 years, it's gone up by $25.
Right.
Yeah.
However, if you had a long-term bond, a 20-year bond, you would have gotten to $142.
Sounds good.
If you had the U.S. stock market, the whole U.S. stock market, it's called the CRISP 1 through 10. It's like every stock that's traded from 26 on. It's a very detailed study. Every stock traded from 26 on, big, small, all of them. $1 turned into $7,000.
Wait, you either had the $26 or $7,000?
Yeah.
Sign me up.
That is why it makes sense particularly when you're younger, to invest in the stock market like there's no tomorrow, because in fact there has been at least many amazing tomorrows that had followed. Remember, the Depression was in a big chunk of that.
And a lot of other things, World War. What about the little smaller companies? How did they do?
Oh, you mean the little scary companies that nobody buys and nobody wants to own because they're scary?
Yeah.
Had you had the courage to go into, and it's called, hold on, I got to go back a little bit. I got to find it's called it's the CRISP. Oh.
Is it 9, 10?
It's not, I think it's 8, 9, 10. It's either 8, 9, 10 or 9, 10. I can't remember which. But anyway,
very smaller. Yep.
Yeah, they're very, very small companies. If you had invested in these back in 1926,
yeah,
you would
hung
have
on.
over 20, it would have grown to over $20,000.
That's
So
when
basically,
you think about that's
20,000 times your money.
Yeah, and if that doesn't give you encouragement in tough times like this, if that doesn't give you encouragement to believe in stocks in the long haul, well, I don't know what does.
And the other thing that's really interesting is when you look at the returns of the market over the course of many, many years, and you look at little 5, 10-year, 20-year rolling periods, you're not going to find a single 10-year period in which you, with a diversified portfolio like this of stocks, where you would have lost money. 855-935-TALK, our number.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
This is really important stuff we're talking about, and you got to make a real phone call to get the real answers that you need to be really comfortable in the future. So get real, get the phone, give us a call, 855-935-TALK. I'm going to wear myself out before this show is over. I can feel it. And today we're going to do something a little different. Rather than taking the canned phone calls that came in from the phone number, today we're going to go to those people who for some reason find it more comfortable. I certainly don't. Typing, not my forte. You know, I write a lot of stuff, and I'm not good at typing it. But apparently people like to type. So they type in questions, and they send them to us. And then Tom gets them. And what happens? Here's what happens. Tom, he picks out some that he thinks are really good for the show, and others the advisors answer.
Yeah, that's true. This comes from Tammy. Who writes, I know you gave the percentage of people waiting until age 70 to take their Social Security benefits recently. Somewhere around 6 or 7%. That's right. Mm-hmm. It's a very small number. And it's horrific because people leave a lot of money on the table. I'm wondering whether you have any information on what circumstances or reasons people have for taking it at an earlier age. Specifically, I'm wondering how many people choose to take it earlier based on predictions that Social Security benefit program solvency is only through 2035. Do you have any information?
So you
this
better
we could
get
talk
it
about.
fast.
Yeah, get your money now before it's gone. Thanks for the great education.
Well, that's part of it. Of course, that's part of it. It's in the news all the time. Social Security is going to be insolvent. And okay, if I had to lay odds on this, I would say there was maybe a fraction of 1% chance that the government would let that happen. I think
they basically can't because you basically have pitchforks and they'd be burning the Capitol.
Well, we tried. Well, okay, somebody tried that once.
Yeah, that's a bad example.
I don't think
it would be tough.
Politically, it would be disastrous.
They call it the third leg.
And the fact of the matter is, there are so many ways to solve the problem if people only had Congress, only had the courage to make a few minor changes, like upping the limit on Social Security earnings.
Right now, it's capped at
it's 144,000 or something,
okay.
and that's just a ridiculous.
That, yeah.
That's if people who are in the low brackets are taxed a lot, people in the higher brackets probably should be taxed at exactly the same rate, no matter how much they earn.
The likelihood is around a change. And by the way, it's not. People also think it's an all or nothing proposition. In the year, it's before 2035. The program will only have about 75% of the money it needs to pay the full benefit. So it doesn't mean it's going to zero. That's one thing. So that's a silly notion. But it's likely that sometime in the next 10 years, Don just mentioned one example. I think people under the age of 40 probably have to wait longer than age 62 to get Social Security.
Yeah, plus the FRA will be cranked up, the full retirement age.
Yeah.
I mean, for me right now, I just hit full retirement age. Just hit it, like this month.
Well, I can tell by looking at you.
Yeah, and you can tell I'm falling apart. And I got my little letter from Social Security, but what am I doing? What do you think I'm doing?
You're waiting?
I'm waiting until I'm 70.
Yeah. Here's the part that people forget, Tammy, is it's an 8% a year raise a year after Don's full retirement age. I just looked at mine, for example. If I take my benefit at full retirement age, which will be 66 years and 10 months, that's like 20 years from now for me, long time from now. But that's a bad joke. Okay, it's coming up fast. But at any rate, my benefit will be $3,150. Take a guess what it will be if I wait till age 70.
Well, it'll be 4,000 something.
Yeah, it's like $4,100. It is and that's the benefit you get the rest of your life, of course, other than inflation. That is it. They don't come back and say, oh, we'd really like to give you more money. That's all you get. So, yeah, most people should wait. Do you have to live a while? Sure. You got to live about 10 years after you take the benefit to really see how this is going to play out. I would not make my decision, however, on when I'm going to take Social Security based on the program's solvency. I think that's a silly notion and one that will, as you pointed out, will be fixed probably a month before they have to.
If you haven't taken really good care of yourself, you're kind of falling apart. You just don't think you're going to make it until you're 80, then go ahead, take it early.
Yeah, you got to live. If you wait till 70, you got to live till about 80.
80 something.
That's true.
Yeah. And I just looked. I just pulled mine up. 3,010 right now. That's how much I can get today. 4,069 if I wait.
There you go.
Just less than 4 years.
And if you die first, which would be the expectation, your wife either has her benefit or yours after you're gone, which is going to be bigger. Mm-hmm. A lot of reasons if you're married.
Yeah, a whole lot better for my wife. Yeah, absolutely. 855-935-TALK, 855-935-8255. We would love to talk with you about the things you do with your dough. Call the show, okay?
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Celebrities endorse things all the time. I think it's how Bill Shatner got to 90. He was able to keep himself alive with all those bad endorsements.
He was the travel guy, right? What was
Travelocity or whatever it was, and you see, I mean, nowadays there's one I'm going to do a podcast on in the not too distant future, where they have Rudy Giuliani and who was the other guy? They got a couple of people promoting a product that is really, really fishy, and I want to talk about that. I don't want to spoil it. It's about a title protection scam, basically, in my opinion.
Oh, God. And what is Joe Namath? He does one.
Joe Namath does. He does. Oh, we're going to talk about this the next hour. Oh, no, Medicare Advantage.
That's right. Oh, thanks, Joe, for setting us up there.
That's next hour, next podcast.
Yeah, that's right. That's right. Yeah.
Yeah, but
that's a good one.
And then we have all the people like Matt Damon pitching cryptocurrencies.
Yeah. Mm-hmm.
And recently, a celebrity, a billionaire celebrity,
True.
celebrity.
She is. Yeah.
Who I cannot for the life of me figure out why she is, in fact, a celebrity. I don't know that she has any talent for much of anything, my opinion again, but...
Doesn't matter.
But she was promoting a new crypto asset called Ethereum Max. A big crypto asset. Tom,
okay, sorry.
Tom.
Sorry. Okay, all right.
Tom.
Going back to the story. I'm reading the story now. Okay, I'm reading the story.
Wow, that is one big crypto asset.
Yeah. Kim Kardashian has agreed to pay $1.26 million to settle charges with the Securities and Exchange Commission for failing to disclose that she got paid to publish a post on Instagram about Ethereum's Max's crypto asset. $1.2 million.
This is curious.
Now, I know that doesn't mean anything to her. I mean, that's no money whatsoever.
No, that's like 1/1000th of her net worth.
But the idea here that you go out and you do something because a celebrity says to do it, I've always questioned that for one reason, but especially when it comes to money, what more does she know about cryptocurrency than you do?
Now, I would say probably most people who listen to our show, she knows less.
Yeah, I'm going to agree. And when you just mentioned Matt Damon, I mean, that was the Super Bowl last year, right? Mm-hmm. Where he was doing the pitch. And then, of course, what happened to crypto?
Yep.
Went right down.
But here's something really interesting, though, about the whole Kim thing. Because I was wondering when I read this, I'm going, whoa, wait. This is usually the territory of the Federal Trade Commission. They're the ones who enforce the lack of disclosure of payment for endorsements.
And she's not registered, obviously, as an advisor.
No, but the reason they did it is they said they consider, and this is an interesting precedent, they consider Ethereum Max a security and therefore something they can regulate.
And that's one thing to look at. I think the other one, frankly, Instagram, YouTube, TikTok. Here's something for you to go watch if you're interested in this topic, because I still haven't finished what I'm watching about it now. It's on Netflix, and it's all about the GameStop Reddit et al. And it turned out, I didn't even realize this, Don, until I started watching this, that the guy who kind of started the whole thing with GameStop, he was actually a registered advisor. He was pumping the stock up, and he ended up making millions of dollars. But he portrayed himself as anti-Wall Street. You got to do this. You got to get the hedge funds. You remember the whole thing. Well, it turned out quite a bit of self-interest involved in all that. It's worth watching just to get a feel for why people say the things they do about, and I'm using air quotes now, securities.
Yeah. And, but I kind of like the idea that maybe the SEC is going to consider them securities because it's going to give them the authority to start cracking down on some of the misleading sales techniques and actually starting to require people, the only people who could buy and sell those securities must be registered as an investment advisor or as some sort of a broker-dealer under some system that they will hopefully devise in the not-too-distant future. But, this got me thinking about a lot of the stuff you read. Particularly stuff you read. This is where this abuse is rampant. There are so many articles online from magazines like Newsweek and Forbes and
Inc.
Kiplinger's and Inc. and Entrepreneur, particularly, by the way, Entrepreneur magazine lately. And these articles are all paid articles. The authors paid to be published in these publications. And yet, most of the time, very, very rarely, do I see any kind of disclosure of that. It's required that there's a disclosure that so-and-so paid for this program. We say it at the beginning of ours. We pay for this. And they're not disclosing, so you think you're getting unbiased advice. Give us a call.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Wait, what month is it?
Exactly. It's that month.
It's October?
Friend.
Oh, darn it.
Yeah. Yeah. Guess what?
I guess I better do my taxes tomorrow.
Yeah. You got like
there is no more
you
time.
got 7 days.
I have 7 days. That's it. There is no more time. No more extensions for me.
Hope my wife isn't listening. I told her it was October 1st so she'd get the stuff done.
You lied.
I think I might have misled her a bit, but got done. It got done, so it's done.
855-935-TALK. That's our phone number. Give us a call. We're going to try and help you make more money, save more money, invest it better, deal with it more sensibly, and stop getting ripped off. Joe, you're up. Welcome to the show.
Thank you. You were talking earlier about continuing to not take retirement benefits until you turn 70, correct?
Social Security, yes.
Social Security, I'm sorry. I think you misspoke if you said that the spouse's benefits will continue to, they'll be able to take your benefits at age 70.
No, that's not what I said. Sorry.
Their benefits cap at full retirement age.
No. You said if they die.
I said if they die. So
if you die.
Correct. The example was Don dies first, as we would anticipate.
Right. We're
Debbie
figuring I'm going any moment.
Debbie can... Well, another hour would be nice.
Okay.
Debbie either can continue with her benefit or claim Don's benefit. That's the point I was trying to make, Joe. You're exactly right. It doesn't get any bigger after that for her. But in this case, and in my case, it's going to make sense for me to wait till 70, being the larger earner.
Plus, your wife is a lot younger than you.
Yeah, I don't know. Yeah, I'm always wondering about. I've never seen a birth certificate, so I don't know that for sure. Okay, so,
you are getting in a deeper and deeper hole. So, Joe, he was talking about if you die, if the beneficiary of the Social Security benefit dies, their spouse gets that same benefit. But no, the spouse does not get the benefit.
That increase.
No, they'd have to wait till 70. Also,
was that your question?
Well, or if they make the voluntary choice to take the spouse's benefits rather than theirs,
correct,
and both are still living, then they don't get the benefits above full retirement age benefits, even if the other spouse waited till age 70.
That's correct. Yes.
Yep, that's right. Yep.
Yeah, we were just talking about death. Okay. Thank you, Joe. We appreciate it. 855-935-TALK. You what?
Well, no, I'm just thinking if we want to get into a lot of discussion about Social Security, we go on for about 5 hours because there's all these little codicils
I honestly hate
rules
talking about Social Security.
Anyway,
just like I hate talking about taxes because they're so complex. And
you can see mine right there.
Who drew up the rules?
156 pages. 150.
Is that 156 page?
150. I got to review it tomorrow just to make sure that
maybe I won't
right.
be done tomorrow.
156 pages. It's ridiculous. Come on.
Because I have 2 K1s this year, and
yours is going to be up there. You're going to be over 100.
Well, I don't know. It's in TurboTax, so I don't really look. Well, Gabriel, you're up next. Welcome to our program.
Well, good afternoon, folks.
Hey,
I appreciate the program. I listen almost every week. So I know you talked about I-bonds. You can only get like 10,000, right?
Yes, sir. That is correct.
Are you there?
Yes.
Okay.
We're listening.
Okay, well, what? Okay, what about Treasury notes or Treasury bonds? Can you buy them at any size, or
yes?
How does that work?
Yes.
Can I get like a 3-month Treasury note?
Any other Treasury security you can buy in any amount you want up to the total number of bills floating on the planet. You'd have to have a lot of money to do it.
And you got to wait for the auction. You got to wait for the available.
Auction. Or you can buy them in the secondary market. But yeah, in the auction,
True.
You can buy as much as you want. There's no limit. The only reason they're putting a limit of 10,000 on these Treasury I bonds is because the rates are all over the place. And it's more like a savings bond. They consider them to be more like a savings bond, just sort of, and as Tom calls them, they're gimmicky bonds. But
okay, well, how do they compare to like a CD? I mean, CD rates are paying like 4%, and so are Treasury bonds. Which is better or safer?
Inherently, and this is a mere technicality, the Treasuries are considered to be slightly safer because they are direct obligations of the U.S. government, whereas the FDIC is a government-backed insurance pool.
Which has never had a default.
Right, because they've been very, very good at moving assets to new banks.
I would just,
but they're
depending on the situation, I would take either one. I don't think there's any difference there, really. I don't.
Yeah, it's like 5.9999 one way and just under half a dozen the other. Or just over half a dozen the other. It's not that big a deal. So, yeah, thanks for the call. We appreciate it. 855-935-8255.
What's your prediction?
Hey, hold on, Nancy's up.
Oh, go!
I got to get to Nancy.
What do you think? Because they're going to redo it. They're going to reprice.
No, it's like 5%. I think
they haven't said it yet. I don't think.
Nancy, welcome to the show.
Go for it.
Hi.
Hi. What's up?
Hi. So I have a kind of a broad question. I'm not really sure if this is your area or not. Because you guys talk a lot about fiduciaries, which is what made me think of you. The situation is my parents have. They're in an independent living. They're comfortable financially, but they want to. My dad wants to start doing less in terms of taking care of their monthly bills, and he's been doing their taxes. I mean, he's almost 90, and he still does all of his own taxes and manages all of his own funds. And he's just feeling a little befuddled, like it's starting to be too much for him. And they have their money's in different places.
Okay.
They have a trust, and myself and my siblings are heirs, so we can't take on responsibility for them. But I'm wondering, what products should I research? I don't know if product's the right word, but what would
you don't
be
want to? There really
do?
isn't a product for this kid. He's going to need, if every senior I've ever met, including me.
Paul
wants a human touch, somebody they can talk to, somebody they can help. That's where these fiduciary advisors come into play. That's the people we talk about. They don't sell products. They don't work on commissions. You pay them a fee for their services. Some advisors are just managing your wealth, your accounts, making sure the income stream is set up properly, that they get paid properly. Others have some tax or relationships with tax people who will help them get the taxes done. Others have relationships in addition. They don't actually do this, but they work very closely with estate attorneys, and that's what I can tell you. That's exactly what he needs. He needs a fiduciary firm like a Vestry.
Okay.
Go to talkingrealmoney.com/help. We have a whole bunch of material there on how to find an advisor, how to interview them, the questions to ask, the fee structure that you should expect. I compare a bunch of different advisors and their fees there. So it's a lot of really good information, but I am confident that that's what they need. A real human being who is going to take over that onerous management of money that is one of the harder things we do as we get older. It's better to have somebody do it. For most of our lives, we're probably capable of doing it. I know I've said that for decades. Most people are capable of managing their own money up to a point. And I think your dad's reached that point. As you said, stuff is everywhere, and it's a hodgepodge, and it's a mess, and it's confusing, and it's probably frustrating the heck out of him. So I would go to that page, talkingrealmoney.com/help, and find out how to get a good advisor. Thanks so much for the call. We appreciate it. 855-935-TALK. You can call that number 24 hours a day, 7 days a week.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
One of the problems we have here on the show is that we don't have the time to get into a detailed discussion or analysis of your life and your portfolio to help you really determine what the best course of action is, which is why, since we started our firm, Vestory by Appella, we've been offering everybody the ability to call and talk with one of our advisors, or even with Tom on Saturdays. I
had one today. It's delightful.
To just look over your portfolio and decide whether you might need someone. What? Why am I pointing at me?
I'm pointing at you because we're running out of time. That's why.
I thought it was. No, we're good. We got a few more seconds.
Okay.
Yeah. Go to Vestory.
We'll use them. Come
Go
on,
to
man.
Vestory.com and set up an appointment there. Go to Vestory.com or call 800-386-3004. Get the help you need. It's not going to cost you anything to get some help. And it is, there's no sales pitch. You actually get real help. And if we don't think you need us, we'll tell you, do something else. Vestory.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. To keep the lawyers happy.